InvestSMART separately managed account benefit number 12. Income when you want it. Separately managed accounts allow investors to receive income as they want and need it. Dividends from the stocks can be paid straight into your linked bank account. Investors can also set up regular withdrawals and take ad hoc withdrawals when they want. For more information, visit www.investsmart.com.au or download our new app.
Hello, I'm Tony Kaye, the editor of Eureka Report. Welcome to Property Point. I'm joined by Nerida Conisbee, Chief Economist from REA Group.
Thanks for having me.
Yeah, welcome Nerida. Nerida, today I wanted to talk about what's happening in the investment market with property. What are you seeing? What are the strongest areas at the moment?
Melbourne and Sydney are obviously the strongest areas from buyers, and that is being reflected also in capital growth. So we're seeing a lot of people looking to buy in those markets, and prices are obviously rising. A few surprises though, if we move outside of Sydney and Melbourne. Hobart is continuing to do very well. So Tasmania, we continue to see very, very high levels of demand on site, not just from buyers but also from renters. Tasmania is a small market, so you do need to be careful when investing there. But the fact is Tasmania has had pretty much no new development over quite some time, and makes it very different from every other state. And it seems to be catching up on that state now that we're seeing quite a bit of price growth, particularly in Hobart. So Hobart's an interesting market. Gold Coast is another one. So the Gold Coast economy is doing well at the moment. We've got the Commonwealth Games coming up. We've got new infrastructure spending, got a new light rail there. We've got things that attract a lot of people, like lifestyle, affordability seem to be big considerations in that market. And we're seeing really, really strong rental demand. So the Gold Coast tends to boom and bust a little bit, so we do tend to see a bit of overbuilding taking place when the market's strong. At the moment, though, it looks like the level of development's about appropriate. Strong rental demand, strong buyer demand, and quite a different situation to what's happening in Brisbane at the moment, where conditions are far weaker.
So is Gold Coast a good investment opportunity, would you say?
Yeah, I mean, certainly something to look at. You'd have to be obviously careful where you buy, depending on how much development is taking place in which suburb. But certainly locations close to the beach seem to be doing really well at the moment. So, definitely something to look at. But always be conscious with the Gold Coast that historically there has been situations where they have just built too much, and it's had a huge impact on that market. But, right now it's doing pretty well.
I was driving out of Melbourne last weekend. There's still a huge amount of building activity going on as more and more of these new estates are getting opened up. So it's interesting to see, with all of the talk around housing, that area still seems to be moving ahead.
Yeah, look, house and land is very closely linked to jobs growth. And particularly in Melbourne, that when we see lots of jobs growth, we do see lots of demand for house and land. The thing with Melbourne, though, it is a city that is very good at building lots, and lots of house and land development, lots of apartments, and it has kept Melbourne relatively affordable. If we have a look in Sydney at the moment, house and land is not that affordable for many people. That in Melbourne you can still get a house and land package for $500,000, $500,000. In Sydney now, house and land, it'd be really hard to find a house and land package at that price. So much so that traditional house and land locations such as Kellyville, the median price now is well over $1 million. So those affordability issues are quite different in Melbourne to what we're seeing in Sydney. Yeah,
there's quite a differential between the two places. And then up in New South Wales, obviously, you're also seeing a lot of people leaving Sydney just because of the sheer cost of living in Sydney and buying into Sydney and moving to areas such as Newcastle and other regional cities.
Yeah, I mean, certainly Central Coast and Wollongong are doing really well at the moment. We're seeing very high demand. We saw very high demand for the Central Coast last year on our site. Now that's flowing through to Wollongong as well. So it makes a lot of sense for people because, if you're looking for lifestyle and you're looking for affordability, those areas offer that. The thing, though, that you do have to accept is you may have to do a really long commute. But, I think people are making those trade-offs between a far smaller property in a far less desirable location and being in Sydney, or taking a 2-hour commute and locating to these regions.
So are they good investment opportunities, those areas?
Yeah, definitely. I mean, particularly if you're very familiar with the areas. I mean, there's parts of Wollongong that, aren't that desirable. Then there's some really beautiful locations that should be considered. Central Coast, we've certainly already seen quite strong price growth there because of that demand from Sydney. You mentioned Newcastle earlier. Again, the Newcastle economy is doing pretty well. We haven't seen much development there over the last few years. So Newcastle is another one that is also worth considering.
And if we spring around the country a bit, so Brisbane, what's that like at the moment on the investment level?
Yeah, I mean, Brisbane's a little bit concerning. There has been a lot of development taking place, but we're also seeing a bit of a drop-off in rental demand in that market. So it is a market to be very careful of. Quite different for apartments to houses. So houses continue to see pretty high demand from buyers, but from a rental perspective, you do need to be a bit careful in Brisbane. So a very different situation to what we're seeing on the Gold Coast.
And Adelaide?
Adelaide fairly steady. I think Adelaide, Adelaide's similar to Perth in that it's not a high growth market, but Adelaide never saw those highs that Perth saw. So, it has remained a very slow market for quite some time, but there are, always opportunities in slower markets, and particularly inner suburbs. We're seeing really high demand in Adelaide. So, places like Norwood continue to see really, really high demand. So, it goes without saying, buying in the best suburbs, the best housing in the best suburbs, you'll probably do well even if the market's really slow.
And then I know Darwin's been a bit of a trouble spot for some time. Is it still shaping up that way?
Yeah, I mean, we're starting to see some positive signs in Northern Territory. So, again, it's a really small market, so you do need to be a bit careful when looking at it and understand it too, because I think that's the other factor. And I know we're starting to see a bit of a pickup in rental demand in Alice Springs, but, talking to people who know Northern Territory very well, they were saying, one small project in Alice Springs can lead to, a bit of population growth, which could lead to quite strong rental demand. So, it's a very small city. So, but certainly Northern Territory does seem to be picking up a little bit quicker than what we're seeing in WA.
And on the rental level, obviously in cities such as Melbourne and Sydney where prices are growing, that means your returns are getting lower.
Yes.
Which you've written about for us.
Yes.
And has that been the case right around Australia? Or are there better areas to rent than others?
Oh, look, I mean, you can get better yields outside of Sydney and Melbourne for sure. I mean, Sydney and Melbourne yields are really low, primarily because we've seen that really strong price growth. I mean, even now in some mining towns, mining towns really had a huge bust following the downturn, but now the prices are, they've come right back, but rents haven't dropped to the same extent. So some of those rental yields you can get in regional areas are looking pretty good. I think, though, what you do need to be careful with is that although the rental yields can be good, you're not going to get that capital growth. So it's kind of that trade-off. It's funny looking at places like Cooper Pedy. Cooper Pedy, 50 grand for a house. Rental yields are okay, but those houses have been worth 50 grand for the last 20 years. So, you've got no capital growth, but, if you're after a monthly check, they're places worth considering.
That's right. It's always the trade-off, isn't it, between in investing, getting the yield and getting the growth. Yeah,
and I think the majority of property investors go for that capital growth, and that's why we see so much money coming into places like Melbourne and Sydney. But if you're from a regional area or you live in a regional area, it's worth considering, because I think if you really understand your local market, you can do pretty well.
Yeah, it's important to understand what the markets you're living in.
Yes, definitely.
Oh, well, thanks for coming in, Nerida. It's good to have you again.
Thanks for having me.
I'm Tony Kaye. I'm the editor of Eureka Report. Join us again next time for Property Point.